Okay, so I want to discuss the recent issue, which a week ago, the failures of three different financial institutions, with reference to my idea to explain my students regarding run-on bank. So let's share with you a PowerPoint so that we can get a better idea. So a week ago, Silicon Valley Bank and Signature Bank and the Credit Suisse failures occurred. And the objective of this lecture or a small talk is to explain that what happened to that bank, that each institution that they failed. And then the depository insurance institutions have to take care of their depositors. So first we will discuss Silicon Valley Bank. That's the start of the event. So the first Silicon Valley Bank went into trouble, and after that the Signature Bank, and because of these two banks, that also triggered the problem for Credit Suisse. So let's see Silicon Valley Bank. Silicon Valley Bank was founded in 1883 with the objective to serve the startup companies, especially the tech companies. And that's why they named it as a Silicon Valley. The loan portfolio, very recently in December 2020 financial statement, the loan portfolio, if we look at the percentage or the composition of the loan portfolio, we saw that 56% of their loans were granted to venture capital firms and private equity firms. 14% to mortgages, but that goes to very high value individuals with a great creditworthiness, and 24% to the technology and health related care companies, and that's so by this composition, it reflects that the bank loan is having no any big issue. So in February, Forbes rated that bank the 20th bank in best bank out of the best banks of the America, and the ROE for their equity is around 13.8%, which is quite high. And in March, Moody Investor Services rated the bank's loan portfolio as a conservative. Conservative means that the loans are granted on a prudential basis, or on the very highly prudently they lend the money. And they are also high performing, not there is any issue of a bad debt, or there is any issue of a defaulted loan. So that's so you can see that the bank, till the beginning of the match, or in the very first week of the match, the bank was sound. But what happened, that because of the Federal Reserve raises the interest rate, and also a decrease in the values of the tech companies in the stock market. So that triggered the series of events, like the bank is facing a problem of meeting their liquidity, because these tech companies try to withdraw cash in order to meet their liquidities, and this withdrawal create a panic for the depositors of the Silicon Valley Bank, SVB, and about in only 2 days, in 2 days, 81% of their deposits were withdrawn. So, and this is what we call it as a run-on bank. So there was a run-on bank at 81%. So in that situation, the FDIC and the Federal Reserve step in, because FDIC is the insurance company providing insurance to the depositors. They step in, they take the control of the office of this Silicon Valley Bank, and issued an order taking possession of SVB, citing inadequate liquidity and insolvency, and appointed the FDIC as a receiver. On March 26, very recently, just a few days back, the bank was handed over, or that is purchased or bought by First Citizens Bank shares, the commercial operations of the SVB. So this is the very recent example that we can quote as run-on bank. Similar to that, very similar to that, if we look at Signature Bank. Signature Bank is also considered to be bank, deals with mortgages, private equities, but their major portion of their business is, or their target market is, commercial real estate, mostly based in New York City or Manhattan. So in December 2022, the bank has a total assets of 110.4 billion and deposits of 82.6 billion. With special reference to with the Signature Bank, there are some political issues as well, because this bank is known to finance the Trump Tower and also the daughter to the Donald Trump. So that aspect cannot be ignored. But the problem is, again, with these things, and also one of the controversies attached with that bank is that there are a lot of cryptocurrency operators having account with this bank, and this bank is the first who provide the legitimacy to the cryptocurrency trading or something like this, in which they can operate in their accounts with them. So that's two controversies, or out of context, not the real. We can say that the concept of run-on bank is not the only reason. There is some that issues as well. So on Sunday, March 22nd, because of these controversies or a political nature, Signature Bank was closed by the New York State Department of Financial Services. The next day, because of this news, there is an avalanche of withdrawal requests from this bank. And again, by this, that whole banking system is working on a fractional reserve deposits. Like out of their deposits, they are keeping only 5 to 10% of the in a liquid asset, and rest they lended. So by this way, when there's a huge withdrawals, then the banks were in problem. So we see that this on March 13th, Monday, agencies by the depository insurance institutions. So we see here these three banks failure. So if you have guys any question, you can ask in the below comments, and hopefully I will reply you as soon as possible. Thank you.